Hey, I'm back. So this one is going to be a short video, or hopefully it's going to be short. I have the tendency to rambling on. But just trying to decompress from last live stream that I did this morning. I know it's a bit sad situation, but I'm trying to, get back to the groove of things here. But I wanted to spend some time to talk about the Warren issue and what I'm going to do with that or what people should be doing. But of course, this is not a financial advice. As you know, I'm pretty biased in my analysis in this company because I believe in the long term growth of this company. I feel like in a year it's going to be a lot better. The company balance sheet's going to grow into something amazing. But of course, that's not shared by everyone. I get that, but hey, this is just a moment in time in which I wanted to talk about the Warren, okay, specifically. And I do apologize for the drawing too, because I'm using my mouse. I don't have my drawing pad with me today. Not sure where I put it actually, but we'll find it later. All right, so let's talk about the Warren and whether it's beneficial or detrimental to the company. Of course, my opinion is that it's going to be good for shareholder. I know it's dilutive, the way that people are putting it, but if just assume that everybody were to exercise the warrant, it's only awarded to shareholder. And so technically it's not really dilutive, it's diluted to you, assuming that every single person who owns GME is going to exercise that warrant in some way, okay? Now, you have the choice, right? I'll talk about it as well. But right now, so as it was filed at earnings, we are going to receive one warrant per 10 share that we have, okay? So one warrant per 10 share. Each one will give you the right, think about it, the right to buy GameStop. One warrant equals to the right to buy one share of GameStop at $32. And this warrant has a what is it, a life? You could say a life. Has the expiration until next year, okay, October. It will expire October 30th of 2026, okay? So you have about a year to decide whether you want to exercise this warrant or not. Now, why would you be happy to buy GameStop at 32 when the price is only 25 right now? People would laugh like, oh, there's no way, right? Okay, that's the bet. We don't know whether the price is going to be up or down. Right now, all we know is that it's being traded at 25, okay? As you know, the price fluctuates. We never know where it's going to go. But hey, some people think that it would never exceed a certain price. If you are one of those people who think that GameStop would never exceed 32, then when you get the warrant, you are going to be able to sell it to someone. If you want to do that, that's on you. Well, that's your right. You own GameStop. Now you get the dividend. You could do whatever you need to with that dividend. That one will have a price attached to it. So one warrant might equals to, again, this is a made up number, okay? Might be more, might be less. 15 cents, let's say, when it become available to people, which is October 3rd of this year, okay? October 3rd. You will be given, for every 10 share, you're going to get one. So if you have 100, you're going to get 10, okay? And it will be traded on the market, and you will be given a price associated with that. Again, it might be 2 cents, it might be 3 cents, who knows? But let's just go with the number here, 15 cents, okay? Now, depends on the demand, up or down. You could, like I said, you could sell it to people if you want. But some people would buy more. You could buy more, right? If it's traded and so much demand and people, again, buying and sellers, seller and buyer, they're going to be able to decide whether they think that GameStop is going to, trade it up or down, right? Now, the benefit comes when people realize that the most benefit would comes when people realize that if GameStop were to trade above 32 by the end of the year, okay, let's just say by the end of the year, GameStop is traded at, be conservative, $40 a share. I know people are going to be laughing like, haha, that would never happen. Okay, that's fine. But let's say it happened and it's traded at that price, right? So now you have the ability to exercise your warrant at 32. Okay, so if you have one, then you need just $32 to buy GameStop, even though GameStop is traded at $40. So the value proposition is coming from if it goes above 32. Eventually, right? If you want to wait until the expiration. Also, too, the value proposition currently, the reason why I'm so excited is because this, for the ability to trade this warrant on the open market, okay? So if you don't care about the warrant, care about the GameStop long term, right? You may just sell it to someone. Shift that risk to someone who might, want to take on that risk. And then you would immediately receive cash. That's not what I'm going to personally do. What I would do, just hold on to it. And because I think we're going to trade way above, 32 by the end of the year. And let's just say you don't have the money, right? Let's just say, going crazy, right? This is a crazy thought. GME trade at $400 a share. So now by the end of the year, even though GME is traded at $400 a share, you have the ability to buy at 32. I mean, yeah. Can it happen? Who knows? But at any moment in time, GameStop could go from 10 to 80 in 2 weeks. Right? Can you imagine how many people would be like substantially up from here? And this warrant will trade based on the price of GME. So if GME, suddenly skyrocket to $400 a share, this will, like, just one warrant might be $10, $100. Again, it's proportional to the price, right? So this might be $300 per share, per warrant, anytime. So again, this could be very potent for shareholder to stand to benefit pretty much everyone. And on top of that, you get retail participant. One of the criticism I have for the convertible bond was the fact that retail was not able to participate, right? And I think that's why I feel like Ryan Cohen listened to my show, because I did say that. Who knows? I don't know. I'm just like dreaming at this point. But anyway, so that's one of my criticisms. So now this is the opportunity for retail to get in on those deals that convertible notes was not, or that retail investor was not able to participate in the convertible notes. Okay, so this is another form for shareholder to have the opportunity to give GME $32 valuation and come straight from shareholder. Now, of course, this is the best case scenario, but the worst case scenario is this. Worst case scenario, GME will be traded below the current price. So let's just say go crazy that after a year, because we don't do anything, Ryan Cohen doesn't use right? GameStop's trade at 20 for whatever reason. This warrant would go worthless. The price that you see there would be worthless. However, you still have the ability to buy GameStop at $32 if you want to. You don't have to, but you could still exercise those warrants at 32, knowing that you are paying more, just like the convertible note holder, except for the fact that you have to wait until until GME exceed that amount, but you are giving the money directly to the company at $32 a share, right? So in a sense, you're actually an early investor of some sort, like, just like how you are investing in a company that doesn't make money yet, like before IPO, right? But because you believe in the leadership so much that you are willing to give, GameStop or some company that you believe in the long term, the valuation that they have not met yet. Okay, so again, that's how I looked at it. But if you don't want to, then just leave it alone. Okay. It used to be worth something. Now it's not, and you're not forced to. You're not forced to buy GameStop at 32 with this warrant. This one would just cease to exist. In which case, if you didn't sell it to anyone, then it's not really dilutive. Okay. Because that warrant will go expired with you, the shareholder. Right? Depends on what you decide. But you could also choose to dilute your float, but it will belong to you. That share will belong to you at $32, which increase your cost base a little bit if you're just bought it below 32. So to me, it's a win-win. Of course, for me, I wouldn't mind doing this if I have the money. I would not mind doing this at all. Because like I said, I believe in the company long term, and I'm willing to give the company the valuation above the valuation that they are trading at for the risk to the upside. Because anything above 32, I'm going to make money eventually when the company grow into that valuation. Does that make sense? But yeah, so that should be the video. Oh, okay, one more thing. So let's just say you don't have the money to convert. Let's just say you only have 100 shares right now. Okay, 100 share. But then you receive 10 warrant. Okay. And that 10 warrant, by the end of the year, GameStop is traded at $40 a share. Okay, let's just be conservative again. So $40 a share, you don't have the money to buy GameStop at 32. So what are you going to do? What you could do is, assuming you don't have the money, right? What you could do is sell some of this share. So let's do the math. Okay, let me go to the thing real quick. You might not see the calculator. But let's sell, okay, so let's say 10 share or 10 warrant equals to $300. Okay, so let's write that down. 10 share, I should have done that. Per share. Okay, so remember you have 10 warrant, right? So that would equal this much. So you would need $320 in order to buy 10 share. But now, in this example, GameStop is trading at 40. You don't have the money, so you would want to sell 9 share. Let's go with 9 times. Sell enough so that you will be able to buy GameStop. Hold on, so 9, how about 8? Trying to find. Okay, so now with this one, you would sell 8 shares because 8 would equals to this. Okay. So you would sell 8 shares. This is 10 shares. Okay. So what is this example? It means that if you sell 8 shares at this price, you will be able to receive 10 shares. Okay, so you would sell 8 from here to get 10 back. So technically you will increase your holding, even though you don't have the money to buy GameStop at the end of this one. Right? Does that make sense? So by the end, if let's say this is successful and this is the price, you would have 102 share left by the end of this transaction. Yes, you're gonna have to pay tax on this, right? Pay tax on this gain depends on where you bought GameStop at originally. But instead of losing, losing shares, dilutive or whatever, you gaining shares by the end, and you still have the ability to sell it at 40 and expose yourself to the upside as well if it goes up even further, right? So yeah, so that's the example. Hopefully you see the value in this, and yeah, I'm gonna send this to my close friend of mine who might be beneficial to hear about this. Who knows? But anyway, all right, I'm gonna sign off. Okay, bye.